The September quarter results of Reliance Industries sprung no major surprises for investors. Billionaire Mukesh Ambani's RIL posted flat growth in net profit of 13,656 crore rupees, while the consolidated EBITDA came in at 34,663 crore rupees. That said, what captured investors' fancy was the board's decision to demerge and list its financial services undertaking into Reliance Strategic Investment or RSIL. The firm would be renamed as Jio Financial Services. RSIL is currently a wholly owned subsidiary of RIL and is a Reserve Bank of India registered non-deposit taking systematically important NBFC. Shareholders of RIL will receive one equity share of JFS for one fully paid up equity share held in RIL. The windfall Indian tax on transportation fuels and weak refining and polymer margins have been hurting the conglomerate's legacy petrochemicals and energy operations. This is probably why Ambani is spinning off Jio Financial Services to double down on the consumer business and put some sizzle back in the stock.
There was a subdued performance for company as a whole due to the export sales of the petroleum products. But this Reliance Group as a whole known for creating wealth in two ways: organic growth and unlocking by demerging. So many companies have demerged and created enormous wealth in the past. And I think the Reliance Industries is well positioned to repeat that story.
A successful fintech loans platform draws upon the data network activity. The digital trail people leave behind on e-commerce or social media sites can be used to bind them into a strong network, which can be harnessed to encourage borrowing activity. This loop is already in place for Reliance.
So I think the lending and borrowing business, I think, is best done when you have the NBFC company or a banking company. And an NBFC company or a banking company is required largely for the purpose of, I think, two reasons. They have customers to whom they can lend and they have merchants to whom they can lend. Like today they have got about 1 crore Kirana stores and they have got about 16,000 of their own stores, which are basically selling to customers. So when the customer walks into your store, I think this is a bad customer that you can do. When I think the supplier supplies to your store, that time I think you basically do the lending to the supplier based on the merchant credit that you call it. So there are two models which are emerging. One is the merchant credit model, second is the consumer credit model. So I think they have the possibility of making it a large company. Today Bajaj Finance is basically doing lending of around 2,20,000 crores, size of the book that they already created. Now for size of Reliance's business, their retail business alone is 2,60,000 crores. If you look at, I think, the GMV, then the GMV would be far higher compared to what Bajaj Finance is doing currently. And that's where I believe there is a case for creating a separate company, create the liability franchisee and then start lending.
The financial services segment reported EBITDA of 89 crore rupees in Q2, with segment assets worth 95,410 crore rupees and liabilities of only 30 crore rupees. Global consultancy firm Bain & Company expects India's smartphone users to grow to 1.1 billion by FY26, up from about 750 million today. It also expects more than 850 million internet users in FY26, up from about 650 million at present. India has seen investments worth about $35 billion across segments thus far, more than doubling India's share of global fintech funding since 2016. Given this, analysts believe the group's financial services business will seek to become a conglomerate in its own right in the long run. However, the news didn't set the stock market on fire. Shares of the company fell 1.5% on Tuesday, and analysts at Nuvama Research don't expect the demerger to be a value changer for RIL. They ascribe a value of 106 rupees per share for Jio Financial Services. On technical charts, the stock of Reliance Industries is struggling to cross the 2,800 mark.
Reliance Industries is holding 100 weekly moving average support since 2017 with aggressive sentiment. Except the COVID-19 area, Reliance Industries stock hasn't fallen under 100 WMA, which is weekly moving average. Even during the recent issues of geopolitical tension, inflation, fear, and interest rate worries that led benchmark indices Sensex and Nifty to fall 18%, Reliance Industry was successfully trading above 100 weekly moving average. The 100 weekly moving average is presently placed at 2347, which has become a very crucial level. Technically, on daily chart, the stock has a double bottom breakout and it indicates a rally towards 27 and thereafter at 2800 levels. For Reliance stock, crossing 2800 level has become a struggle since last 1 year. A move and a support given by 100 weekly moving average can trigger a rally above 2800 and the stock can easily reach to 3500 levels.
On Wednesday, markets will remain closed on account of Diwali Bali Pratibada.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.